Sir, my name is Tricia Linda from Accounting Class D. This is my video record about the article. What are capital market? Capital market are venues where saving and investment are channeled between the supplier who have capital and those who are in need of capital. The entities who have capital included retail and institutional investor, while those who seek capital are business, government, and people. Capital markets are composed of primary and secondary market. The most common capital market are the stock market and the bond market. Capital markets seek to improve transactional efficiency. This market bring those who hold capital and choose seeking capital together and provide a place where entities can exchange security. Understanding capital market. The term capital market broadly defines the place where various entities trade different financial instruments. These venues might include the stock market, the bond market, and the current foreign exchange market. Most markets are concluded in major financial centers, including New York, London, Singapore, and Hong Kong. Capital markets are composed of the supplier and user of funds. Supplier included householder and the institutional serving them pension funds, life insurance companies, charitable foundations, and non-financial components that generate get beyond the nets for investment. Users of the fund include home and motor vehicle purchasers, non-financial companies, and government financing instrument and operating expenses. Capital markets are used to sell financial products such as equities and debit securities. Equities are stock with our ownership share in a company. Debt securities such as bonds are interest-bearing use. These markets are divided into two different categories: primary market, where new equity, stock and bonds issued are sold investors, and secondary market, with trade exchanging security. Capital markets are a crucial part of a functioning modern economies because they move money for the people who have in it to those who need it from productive use. Primary versus secondary capital market. Capital markets are composed of primary and secondary market. The majority of modern primary and secondary market are computer-based electronic platforms. Primary markets are open to specific investors will buy securities directly from the issuing company. These securities are considered primary offering of internal public offerings. When a company goes public, it sells its stock and bonds to large scale and institutional investors such as hedge funds and mutual funds. The secondary market. When the other hand, includes venues overseen by a regulatory body like the Securities and Exchange Commission SEC, where existing or emerging issue securities are traded between investors. Issuing companies do not have a part in the secondary market. The New York Stock Exchange and Nasdaq are examples of the secondary market. Capital market expansions. Capital market can refer to market in a broad sense for an financial asset. Cooperative financial. In this realm, the financial market is what investable capital for non-financial companies available investable capital includes the external funds included in return I forget of cost or capital calculation, common and reference equal public bonds and preferred debts that are also used in the turn of invested capital calculations. Capital market in corporate finance may also refer to equity financing including debts. Financial service. Financial components influence in private rather the public market are a part of the capital market, that's including informal banks, private equity, and venture capital firms and connected to broker and public exchange. Public market operated by a regulated exchange. Capital market can refer to equity market in contrast to debits, bonds, fixed income money, therefore derivative and commodity markets. Mirroring the corporate finance context, capital market can also mean equity as well as debts, bonds, or fixed income market. Capital market may also refer to investment, the received capital gains tax treatment will sort the gains asset held under and year are taxed and instrument according to a tax bracket. There are different rates for long-term gains. The rates are often related to transactions are given privately through investment bank or private funds such as provide equity of capital. Okay, this is my video.